Digital Asset News. My name is Rob, and today, just as the thumbnail and title suggest, I took some profits on crypto. I'm going to tell you why and what I did and everything involved. So let's just jump right in. So first things first, I think it's important to note that before we get into the conversation of selling crypto or taking profits, just to realize some important things, and that is that before we get into the philosophical of, because there's always going to be somebody in the chats later or in the comments that'll say, well, how dare you sell it? How dare you sell any of your crypto? Because you should hold on to it forever and diamond hands and so on and so forth. Look, I don't know if you've read the Bitcoin white paper. I'm not going to read it for you, but I'm going to link in the description. You can check it out. It's 9 pages, very short, very simple. It's a peer-to-peer transaction. It's a peer-to-peer electronic cash system. That's exactly what it is. That's what Satoshi Nakamoto made it for. And that's it. So if for some reason you have to, come around and sell something for things that you need to buy in case, I don't know, somebody doesn't take Bitcoin, well, there you go. And also on top of that, as we get into more of the bull run or maybe heavier into the bear market, just remember, people are going to sell. And this is a story that we covered a couple of days ago. But as people will tell you, Bitcoin is great and Bitcoin is fantastic, and I believe it is. I think it's going to be the future. I think that it has a very long, illustrious life ahead of it. However, saying all that, there's still going to be people who will sell it, even as they tell you to your face how great it is and you should never sell. And that's not what Peter Thiel said specifically. But when he was on the Bitcoin conference in April 2022 or May 2022, he was pretty much talking about how great it is and how it is the most fantastic thing of all time. And of course, we should buy it all. And just a month before, he had sold $1 billion worth of it, offloading 8 years of crypto investments. So that's just what it is. So that's the philosophical part. Let's get into the nuts and bolts. So look, so for taking profits, especially on dollar cost averaging, we did a video a little bit ago, I'll get into that, about how it all works out. But you could have actually gone back and taken profits, all the way back into 9th November, 15.9, and then sold it around here. I think we can all agree there. It's been chopping sideways, just going here around 15,000, 16,000, 16,000, and all the way up to 21. And of course, today it's at almost 23,000. Pretty good. Now, does that mean that this won't keep going up? No, it could go up another, 10 bajillion %. I have no idea. I don't think everything goes up forever. And just along the lines, I like to take profits along the way and keep some dry powder in case there's, a little bit of a dip. And you can do this with Bitcoin. You can see here on Ethereum, kind of like the same thing. Dropped off. You could have a dollar cost average and sold a little bit up here. But there's some that you, like for me, for Polygon, like recently, I couldn't do that. It looks like it's been, doing pretty much the same thing as far as the price action. So pay attention to Polygon. It's been holding up quite well. And of course, the original video that we talked about, well, there was two. This one, DCA Profits, I linked in the description. You can watch that. And of course, we had Ben from Into the Cryptoverse and Guy from Coin Bureau. We do the NFA Live. We talked about that, about dollar cost averaging and if you do it or not. Hint, hint, I do it. These guys don't right now yet, but they're going to jump in at some point. So the whole thing, it really comes down to this. The question you're saying is, well, how the heck does that work? If you're going to dollar cost average, aren't you just buying back at the same price? Genius. Well, hold on. So when we talk about those things, you have to understand it's just time frames. So in that original video, I showed you this. It's a number sheet, kind of like Excel, but it's for Mac is what I got. And you can just see here, it's quite simple-ish. You can see that I've been dollar cost averaging actually like forever, it seems like. I'm sure you're in the same boat if you've been dollar cost averaging. But if I just, the last video I did, I said, okay, and from December 16th, I put in $40 a day. And here was the Bitcoin equivalent. It was just very simple, 40, 40, 40, 40, 40, 40. And then the average of all the price action for every day that I did, it would come down to around 16,782. Okay, so I spent about 1,000. And that was on January 9th. I spent $1,000. I got 0.05 Bitcoin. And again, one Bitcoin is still worth one Bitcoin. That's not going to change. So all I had to do was wait a couple weeks. And then, of course, I could, if it went up, I could sell or just keep dollar cost averaging. Now, let me make this crystal clear. I'm still dollar cost averaging. On January 10th, I bought it at 17.2, January 11th, 17.5, January 12th, 15. And of course, there's a question mark here, but of course, yes, I haven't updated it yet, but I bought it on the 16th, the 17th, 18th, 19th, 20, 21, 22. Doesn't matter. Well, I don't even know what the date it is. What is the date today? It is of course, everybody's screaming at me. Oh, it's 22nd. Look at that. So I'm still buying $40 with the Bitcoin. But from here in that little time frame, I'm selling this off. And I'm selling and I'm putting in profits. And then the same thing today. Let me get rid of this. The same thing for right now. I just sold back until December 16th, but I could have actually sold off going all the way back to here because I bought on this day. That's the beauty of dollar cost averaging. You buy, well, depending on what you do. Like I buy every day, so I'm always going to buy the lowest points, always, because I dollar cost average Bitcoin every day. So I bought it at 15.9. So I could have gone back to 9th of November instead of just December 16th. That's what I did today. I went back and I took some profits because I took some profits here when it was around 21,000. I took some profits here at 23,000. Again, does that mean that it's not going to keep going up forever? It could. Bitcoin's pretty strong, not for sure. But I do think that things are going to tumble down at some point. And even I take a look at just overall charts. And I take a look at like the MVRV score. The market value is realized value. This orange part here is the Z-score. It kind of gets rid of the noise. And we were still in accumulation phase. And if we actually zoom in a little bit, we just crossed above that point. We could go all the way up to here. I mean, we could go to the moon. I don't know. And then, of course, we take a look at the Puel multiple. It's a little bit different. It looks at the supply side. It's calculated by dividing the daily issuance value of Bitcoin by the 1 year moving average. And this is all about Bitcoin mining and miners and when they sell. So when it's up, it's pretty overvalued. Down here, it's undervalued. And for Bitcoin miners, I got to tell you, I know some Bitcoin miners, and I don't know how unless you're a large entity like Riot Blockchain and you're like an independent miner, it's not easy out there. Some break-even points are around 22,500. But we can just see that we're actually above and into this point. We can go up again, not for sure. But I just take a look at the long haul. I'm still going to dollar cost average today and tomorrow and the next day and the day after that. And at some point, if it goes up, well, great. Maybe if it goes up another 1,000%, I might take some more profits. Or maybe if it goes down, which I think it will at some point, then I'll just dollar cost average some more. And I'll actually do what's called dynamic DCAing, which is put more money into it. Because then when it goes up in 6 months, 3 months, 2 days, I don't know, then I'll do the same thing again. Now, the things I'm looking at lately is this. The Fed's going to come out. The mini's going to be in 10 days. There's about, this is what it's stating, 99.3% chance of a Fed rate hike. Not that much, 25 basis points. If they pause, you're going to see some massive action. You're going to see some prices go up like crazy. So the question is, well, Rob, why don't you just wait until that day? Look, I could have waited. But the thing I'm trying to do here, and I've talked about this before, probably the 50th time I've talked to this now, is that when I get into the bull run, and it's going to happen to you, I guarantee it. Not everybody, but most of you. The price is going to go up exponentially. And you're going to look at that and go, you know what? Bitcoin went from 20,000 to, I don't know, 100,000 or whatever it does. And you're going to say, if it can do that, it can probably go to 100,000 to 200,000, no problem. So I'm not going to sell a dime. And you think if it's not going to happen, but it is. And you'll wait for it to go up, and then it'll dip a little bit down. And you'll be like, it'll go back again. It'll dip some more, and it'll keep holding on, and down it goes. I am trying to do the selling, to put it into my muscle memory, to remind myself what it feels like. It's easy. Everybody on the internet and YouTube will tell you the same BS, which is you need to buy everything. And you could. I mean, you could buy everything. You buy the dips and everything else and get all dipped out, and that's fantastic. But very few people are going to remind you to take some profits along the way so you don't get wrecked and you're holding on to some massive amount of bags. Now, again, you can dollar cost average and you can hold it all the way to the very top. And you probably, like I said, you probably do very well if you have a very long outlook. But as time goes on, I'm just going to guess, I could be wrong here, that maybe there was a point in time in the last 2 years where maybe you wish you had some extra cash on the side to pay for something, whatever that was. If that's the case, maybe you could do a little research into this. But if it's not, and your name is Mark Cuban, or whoever billionaire that you are, then this video is not for you. And that's it. So on top of that, to finish this up, I'm also taking a look at the 10 and 2-year treasury yield. Every time when that inverts, that means between around 12 months, roughly, to 18 months, we start to have a recession. And the 10 and 2 actually flipped in July. So we're 6 months down. We got another 6 months to go. Maybe it happens. Maybe it doesn't. Still think it could. And there's also another one that Ben showed me. This is his website. You can check it out. Links in the description. In the Cryptoverse. This is the 10-year and 3-month, which really can tell you a little bit more tight time frame as far as the treasury yields. When those flip negative, or when those inverse, then you have a much higher chance of hitting a recession. This little grayed out area right here, this is recessions. And it usually happens about 12 months or so into it. Happened here. Where did it happen? Happened right, was this? 2000 to 2001, happened there. And inverted about right here, 2006, 2007. And when did it invert? Yeah. October, roughly. So here we go. And that's what's happening. So if that happens, probably see a little price dip. I don't think that crypto will skyrocket in a recession. I could be wrong. Hope I'm wrong, but that's what we got. And that's it for today. And then lastly, I will just say this. When you sell and take profits, you have to understand about one thing, which is taxes. So with taxes, there's short-term and long-term gains, and it all depends on how you set it up. First in, first out, first in, last out. I'm not your CPA. I'm not your dad, not your CPA. Don't give financial advice. Go find a CPA. And for that one, yes, you're going to take capital gains tax. However, I will remind you that if you did this thing, well, it's called wash trading in equities, but we call it tax loss harvesting, which is really what it is. And you use this program called Coin Ledger, which is that thing spinning above my enormous head. Crypto Taxes Made Easy. They are a sponsor of the show, just so you know. If you cannot stand using affiliate links, that's cool. Just go to coinledger.io, but you'll miss out on 20% off if you sign up for the program. And this one, it helps you do your crypto taxes, and it helps you to figure out what your cost basis is. Maybe potentially when you could sell. Maybe when all the different things that you might want to know about your crypto and how things are going. And you know what's great about it? If you want to run a tax report, it'll cost you. It's like $100 or $200 depending on how many trades you do. But if you don't want to do that, you just want to do like a cost-based analysis, you just click this button called Get Started for free. You can integrate all your API. There's a video on how to do it. For me, when I did this, it took me 30 minutes to when I shot it off to my CPA and I was done. And that's for you. That's for you. I did that for you to help you out a little bit. I mean, that's what I do. But you're welcome to do whatever you want to. And that's it for today. So look, that is it for today's video. We don't usually do the live streams much anymore. Got a lot of things happening and just haven't really been the same for a while. But that is it for today. So if you like today's video, give it a thumbs up, consider subscribing. Now, if you'd like to stick around with me and I'll answer all your questions, we'll do so in the Q&A. So if you're ready, let's jump in the Q&A. If not, get out of here, enjoy football, and do whatever you got to do. Thanks for stopping by. I do appreciate you stopping by and chatting with me. All right, let's get into it. So